bonds, especially for people with long-term time horizons. However, this article assumes that investors has 20-25 years holding period. For practical purposes, you might not even be able to hold a 20-year period. So the question is implied about asset allocation decisions. As an investor, think carefully how long will you be able to hold your portfolio undisturbed, and how much risk are you willing to bear? So let me explain to you how much risk a person today at a 12,000 Nasdaq is actually taking. How much downside are you willing to take, and how much upside is therein? Assuming you're a short-term investor or a long-term investor, but for purposes of global investors, I'm gonna discuss if you are a long-term investor. So let us discuss the long-term investment time frame of about 3 years to 10 years, not about 25 years, but 3 years to 10 years. So let's discuss the parabolic pops and drops. They discussed about asset allocation. I discussed about this heavily. The asset allocation in Nikki's time frame is cash. 25% cash, 25% stocks, 25% properties, 25% businesses. Meaning, if my asset worth is $100,000, I should be invested $25,000 cash, $25,000 stocks globally, $25,000 in properties, whether I'm trying to save up for a property or I already own, or I'm paying an amortization. The other $25,000 is, of course, allocated to my salary or my business. If I don't have a business, then $25,000, that would be my salary, which I might be using for my expenses. So that 25% allocation is supposedly my job. So like, so that's how you do it. So that 25% cash should not be moved. It should not be for paying your amortization. 25% stock should not be moved. You should not be an emergency panic. And then 25% of your business should pay for your whatever your expenses are, or whether that business is business or it is a online business or a job. I mean, it's okay to have a job. Okay, so parabolic pops and drops, what you should understand is that insanity charts. I have been saying that in Nikki's time frame, there is more than greed and fear. It is what we call the DFAGEI. Despair. What does despair mean? It is deeper than fear. There is a greater fear, which is despair. Then there's fear. Then there's A as in apathy. Then there's greed. Then there's euphoria. And then there is insanity. That tells you that there are 6 layers of emotions, at least in my degree of thinking. There's 6 degrees of fear and greed. There's a deeper fear and there's a higher greed. Euphoria is a higher greed, but there's also insanity, which is more than euphoria. Now, insanity charts are wonderful because they make so much range potential, both for the bull and the bear. So a lot of people are saying, when is the next big short setup? Because the big explosion to the downside happens to insanity charts. Insane collapses, of course, will encourage scalpers and traders to also go long. Just because you've got a huge drop doesn't mean that there will not be a trader who would go long. In fact, I'll tell you, as early as June, as I said, a lot of people have been calling tops. Puro Saxena is very famous for every thin Twitter out there. He is a celebrity when it comes to finance Twitter. And he said during June 8, 2020, my year-to-date of return this year is not normal, neither is it sustainable. Let's just say that a number of factors came together all at once, the stars aligned, and it is more a function of luck rather than skill. For instance, COVID-19 triggered a waterfall. So I'm saying that perfectly put, never underestimate the role of luck in the outlier generous returns. Else, if you think that your great success was a result of your talent, you will end up giving up your gains. So read this. I was saying since June that success was a talent and luck. Great success was slightly more talent and enormous amount of luck. Do not confuse great success with great innate talent, because since June, July, and August, June, July, August was a time of euphoria. You could argue insanity. Euphoria to insanity cycle, not just greed. We're talking about euphoria. And we can say that during June, value is price and probability. There's tremendous value in high revenue growth, free cash flow margin businesses, especially when it is a critical infrastructure. How would business have performed if jobless doubled? If low impact, that is the reason why it is expensive and will remain so. Even during June, I was bullish. I was saying ignore the bears on SaaS such as Datadog and Zoom. We will recall that on June 7, 2020, okay, let's go to the charts first, guys. June 7, 2020, at the time, let's talk about your Nasdaq. Let's talk about the Nasdaq here. What was happening in June 2020, June 7, 2020? Tada! June 7, 2020 was this one, leading up to that, closing in to that 10,000. Before we hit 10,000, a lot of people were already saying the market is toppish. Why would they say 9.7, the market is toppish? Pretty much because everyone can see a very clear double top here. Tada! Can you see that? That was the prior top. Nasdaq was trying to attempt to say that at June 7, we are going to hit a wall. And we were saying that ignore the bears on the SAS during June 7, even when the Nasdaq was already hitting that 10,000 wall. Let's take a look at what Zoom and Datadog were doing during June. This was June. This was June 5. If you were buying Zoom video then, that was about $200 after earnings call of Zoom video. $200. I remember Zoom video reported 169% revenue growth during that time. And then Datadog, let's take a look. June 5. June 5 was this one. Datadog was trading at $70. So at the point when Nasdaq was at 10,000, people were screaming, sell. We were saying, ignore that seller. Ignore that seller on SaaS, specifically that seller on Datadog and Zoom. We will eat that bear alive because we had the fundamentals, right? Yeah. So what you could see here is that markets are moving in cycles. We have a lot of people saying that markets move in cycles, and these cycles repeat. It's not a time to be complacent, nor a time to be fearful. It's always a good time to be prepared. So you could see that Ben at Pattern Profits during June 7 was saying, guys, let us prepare in case a waterfall arrived, which never happened, right? But we were cautioning, and these are one of the best traders in the world. And if you haven't followed Ben and Puru Saxena, I'd say that it doesn't cost you anything. Why don't you follow the best traders in the world, the best investors in the world? Fast money on extreme moves have to be locked fast. Crazy times lead to crazy gains, but be very fast. Volatilities expand and explode. Let's give some examples. Zoom Video, DocuSign, Teladoc, Livongo, PagerDuty, Zuora, CrowdStrike, Work. Work would be Slack, Workday 2, Tesla, Salesforce, Apple. Those are a few examples, so let us go to the charts today. Fast money on extreme moves have to be locked. What does Nikki mean? Fast money. Okay, fast money on extreme moves. What do you call making 100% in a month? Is that considered fast money? Okay, if you bought Tesla during that Apple Tesla stock split, right? Kaboom. So you have been buying at 280, that would be 300 or 1.5 Tesla pre-stock split. From about $300, you got a move almost from 1.5 to 2.5, that is 84%. That is what you call an extension after an extension. The first move here, take note that the angles of Tesla here, the Tesla accelerated, kaboom, right? That was an acceleration. 1,000 to 1.7 was also an acceleration. What can you call about these angles versus these? Making this was 66. So I remember $300 because it used to be 330 to 380, right? You remember that. 330 to 1,000, that 300% move. Yes, it was 300%, but that took time. 1,000 to 1.7 was 70%. 1.5 to 2.5, which was also an 80%, happened very quickly. Accelerated moves. Accelerated moves to the upside leads to a downside. Sometimes that downside is something like this, which this one happened 1.7 to 1.4, and then the next leg up, kaboom. But sometimes the downside can also be kaboom. So here, if you haven't sold it to 5 or even at 400, which is $2,000, I'm not saying that Tesla would not go back to about 2.5 anymore. But fast moves up leads to fast moves down. Some people who shorted would make money. That's why at 1.7 Tesla short, they made money. At 2.5 Tesla short, they also made some money. They might be covering today, pre-market of Tesla today is 385. If they shorted at 500 to 385, that is fast money also from the upside and also to the downside, making 30% in 3 days. That is not what you call hard money. That is what you call fast money. Fast money to the move up is also fast money to the downside. Those shorts will also cover tonight if they can. So let's also take a look at some Zoom video. Zoom video, okay. Used to be, what do you call about this acceleration? This acceleration of Zoom video used to be making 80 to 200 took time. The first 300%, 80 to 200 took some time. Then euphoria happened during June time, that 200 went to about 260, that 30% also took time and some profit taking here. In fact, it was a fake out move such that during earnings, yes, you know, from 300, it was 30% up that day, 400, 450, sorry, it was 50% that day. That acceleration move lent itself to be unsustainable. Any move up to the upside in 1 day or 2 days or 3 days is unsustainable. This move was 240 to 450. How unsustainable was the Zoom ride, even if it was 355% earnings growth? No matter your fundamentals, a 100% move in just a short span of time leads to some people taking profits no matter what. And that's really what happened to Zoom video. What's happening to your other companies? Let's take a look at your DocuSign. DocuSign here, 200. Do you know how fast this moved in 2 days? 200 because of Zoom video, it went to 280, 40% in 2 days. Of course, tonight it's falling to 228. That uptick is now back to 228. It could even go back to 200 like nothing happened. That is what you call a fuck you finger. This is what you call the fuck you fingers. These accelerations are people who try to buy all-time highs without recognizing that it is an extension, and that is what you call a fuck you finger. This is also what happened with Tesla, a fuck you finger, right? Is this what you call that 1725? Are we gonna set up to a lower high? Are we setting up that lower high? It is a question mark, right? But we are seeing some topish patterns here. What's happening in some super movers? Okay, it is called a distribution. Fastly, after a 10x move, 10 to 110, right? After an unsustainable earnings call, 20% down, rally to the top. What's that called? Left shoulder, head, right shoulder, head and shoulders, kaboom. Can it go down to 40 or 49 or 50? I'd say that is a distribution sell pattern. Momentum to the downside for Fastly. What else? Momentum to the downside for your Livongo. There's a lot of sell-offs here. After, of course, a blistering run, $20 to $140. Momentum to the upside. After your insanity, euphoria, comes your collapse. Or what you want to call, I don't know what you want to call it, but it is a collapse. It lends itself to that collapse because it is unsustainable. No matter how good a company is, it lends itself to that unsustainability because of, no matter how good a company is, you put the barometer too high. Even a Zoom video at 355% cannot handle it. Even a Tesla cannot handle a 100% move in what? 1.5 to 2.5 stock split. What do you call that? That's insanity. Now, of course, we have seen that. And so it's set up the same. Tesla, Apple. Okay, this was how it happened with PagerDuty and Zora. Let me show to you the charts that show to you that there is a lot of risk happening out there. Take a look at what happened to PagerDuty. It's what you call a prisoner move. If you bought here at about 28 and you bought the breakout at 32, it rallied to 35. After an earnings guidance, which was not at par with what market wanted, you can't even sell at 32. You can't even sell at 28. The market cut you off 30% down to about 26. That went from overbought to oversold in a single 24-hour time span. 24 hours. What happened to Zora? Same thing. You got in at 11 or 12. It rallied to 16. You didn't even have the chance to sell at 15 nor 13. The next day, the gap down was 30%, back to support at 11.20. So you could say, well, I trail stop, Nikki. No, trail stops don't help you there. Position sizes only. If you had 50% or 25% of your position, you were wiped out in just a day. Can you imagine that? One day. This is why we emphasize asset allocation, diversification with stocks. Now you could say, Nikki, what's happening to Amazon? Amazon, I'll tell you what. A lot of people were happy with Amazon already here at about 2425. Around June, people were saying the market is stoppish. Nasdaq at 10,000 is stoppish. What happened to Amazon? No. At 2.5, it cleared to 3,300. It even went to as high as 3.5. Are we going to go Amazon 2.5 back to June levels? Do we have the capacity to go to June levels? You could argue that, well, Amazon is better than everyone else. The Nasdaq is 10,000, but Amazon will not be where it was when Nasdaq was at 10,000. It's going to be higher than that. Let's assume that Nasdaq is not going to go to 10,000. Well, then, okay, where will Amazon go then? If 3.5 is your short-term peak, could it be at 2.9 soon? Is the probability for Amazon go from about 3.3 to 2.9? I tell you that July, people are already cautioning that the market was stoppish. Are we in the euphoria zone or insanity zone? I'd say that, well, yes. The answer is yes. So even if I like the company like Amazon or a company like Apple, this acceleration move is not to be frowned at, nor should you be complacent. There are very few times that you shouldn't be complacent. This is not the time to be complacent. Take a look at the angles here. Apple went from about 55 to 100. It took how long? From March to July, it was a steady 100% climb. From 98 to 150, that 50% move is what you call a blow-off acceleration move. That is what you call a melt-up. That is what you call a melt-up, and a melt-up leads itself to a meltdown. So you might say that, look, I'm so genius, but the reality is your success was a function of your skill and a lot of luck. It was not because you are so great. And if you do not understand that a part of your success was a function of luck, then you might actually give it away. If you didn't sell some Apple at 140 or 120, would you sell it at $100, which is still expensive? At $100, it is $400 Apple. Take note, this was the stock split era. 100 times 4, $400. If you aren't selling at $117 today, are you thinking that you can make it a sell at 130, 140? Maybe you can, maybe you don't. Maybe you can't. You could be a prisoner the way PagerDuty and Zora happened. No way out. You have no way out. 30% down, the next morning you opened up your eyes. There was no way out. So the question is, what is leadership? Leadership is somebody who inspires, motivates action, having a can-do personality, a strong leadership skills, key to leading the charge. What happens when your leaders fall, Nikki? When your leaders fall, like an Amazon, an Apple, and a Tesla, the markets would fall, generally speaking. Key important traits of winners: agree, winners win. Agree, leadership, top dog in its sector. When we talk about electric vehicles, what are the first thing that you think about? You don't think about Ford and GM, don't you? When you think about electric motors, well, electric vehicles, you don't even think about workhorse, even if it is a 10x move as well. You don't even think about NIO or Xiaopeng, right? You think about Tesla. So that tells you that it's the top dog in its sector when you're thinking about a certain sector. Now, when you're thinking about e-commerce or cloud computing, what's the first thing that comes into your mind? Well, you probably think about Amazon. If Amazon is stopping, what do you think is going to happen to your Shopify's, your C Limited, your Mercado Libres, your Ocados of the world, your JD, Alibaba, Pintuotuo? Same thing. Corrections come, but that is natural. And we will talk about corrections. Now, I like Dean Muthok. Dean Muthok is the Warren Buffett of India, and he's also on Twitter, by the way. Some of the best investors and traders in the world are just there for free if you want to listen to them. He said long-term investing does not mean keeping eyes closed. It is actually tracking actively while passively holding. You could be holding your Amazon for 1 year, 5 years, 10 years, 20 years, but you should know that today, 3.3, you might want to sell some because 3.5 could have topped and it could go 2.9. If you don't care that 3.3 goes 2.9, then it's okay. At least you know, you are aware. If the buy decisions are correct, selling becomes infrequent. Frequent selling is a reflection of poor buy decisions. Of course, a lot of the believers of Tesla, Amazon, Zoom Video, they've made so much money here, such that we would emphasize that it takes a different kind of animal to actually understand how $3,000 became $3 million. And so I'm going to share to you a few things as well, guys. Let me share to you that outside risk reward comes from where nobody is betting, especially when you're early. Somebody with $3 Amazon, or let's say $100 Amazon or $500 Amazon might not really care whether Amazon goes down or goes up. He probably just had already that position, 1% of his position to Amazon, and he's married for life. He did that when it was $3 because he was early. He did that when it was $100 because he was early. And he thinks that at $3,000, he'd never buy there, but maybe he'd never sell there because the person who bought at $3, or $100 or $500, and a lot of people did, they never thought that it would go $3,000 anyway, not in their wildest imagination. So who are they to say that Amazon's not going to go $5,000 or $10,000? The trip to 1,000, the trip from $3,000 to $3 million is paved with a lot of corrections. And I will say that too. I don't care if however you skin the cat. You could be an investor, you could be a long-term investor, you could be a trader, I don't mind. But at the end of the day, as long as you are aware with what you're doing, then it's okay. Some people want to leave when the market is crazy because they believe that there will always be an opportunity around. Do you think that the market today is at euphoria or is it insanity? If you believe that the market is not greedy, then you could stay in. But if you believe that the market is at euphoric levels and insanity levels, maybe you won't even short the market because you're gonna get scared, right? Like, what if it went Zoom Video Part 2? But at the same time, will you buy Zoom at $400? You might think, maybe not, I'll wait. So there will always be an opportunity for the person who's waiting on the sidelines. Now, insane moves happen mainly because the hype names had a fundamental catalyst to begin with, and they can persist to higher highs. Now, take a look at some of these. NVIDIA took its time, 170 around September to about 400. So that 100% move initially took a long time. And if you got the lucky chance of buying 190 during March 2019, which is actually a higher price than 2019, you made 100% during July. But what you didn't understand was 400 went to 600 or 40% increase in price performance. But if your cost was 200, you were sitting 200 to 400 to 600. Let me explain to you the math, okay? If I had 1,000, let's say, okay, I didn't have 1,000 shares. Let's just say $100 shares of NVIDIA. Your $20,000 took about a year to go $40,000. Had you waited August to September when euphoria kicked in or insanity kicked in, Your $40,000 went $60,000. Of course, within a single day or 2 days, that $60,000 went down to $50,000. Now, I'm going to ask you, what if you never sold a single share? Right now, I'd say that somebody with $20,000 is seeing his portfolio. 20,000, I waited a year to go $40,000 in a single month. It went 50% up. That is what you call accelerated move. When you see acceleration like this, 600 can go to 400. So if you are not thinking of selling your NVIDIA tonight at 492, and if you didn't sell last night at 520, are you so greedy, or are you in the euphoria zone? Are you in the insanity zone? Even if NVIDIA is gonna go maybe $1,000, why don't you profit take? Because what you are seeing is accelerated moves. It's not a normal thing for you to make 100% in just a month. It's not a normal thing to make 50% in an NVIDIA in a single month. We're talking about $250 billion companies here, right? This isn't like a $2 billion company. You know, Apple is a $2 trillion company. It's not a $2 billion company. Nintendo went from 56 after earnings to 70, 20% up. If you haven't sold any single share, and the market actually gave Nintendo the benefit of the doubt, because Nintendo had 400% income and 500% sales. And Nintendo is nowhere in that frothy zone. From $30, it's at 56. Nintendo was not in the hype phase. So you could argue, okay, Nintendo is not in the euphoria zone. It's not in the insanity zone. So maybe I'll hold off selling some Nintendos, even if the market is crazy. I could forgive you for that, because Nintendo is not yet in the hype zone. Agree. Workday, is it in the hype zone? Let me explain. NVIDIA, some would even argue that it's not even in the hype zone, right? How many people are cheering that Workday is up 25% after earnings? I'm happy. I have a Workday. It went up 25%, 200 to 240, right? So after a few days, it's now back to 220. It might go back to 197, but I could assure you that Workday is nowhere in the zone of insanity like Tesla, it's nowhere there. What was the price? Okay, 118 during March and April, 197. What's the price to sales of Workday? Is it same as like Zoom Video, trading at 40 times price to sales? No, this is like 15 times, 10 times price to sales. So you gotta be careful what you're selling. Sure, you can get carried away. Why don't I just sell everything? Ask questions later, that's fine. Sometimes what I'm saying here is that a lot of people like to sell the nuclear button and sell everything, except that if you're already a prisoner, for instance, like PagerDuty is already at 27, what could you do? You can't get out of 32, right? It opened at 27, 26. Are you gonna sell it at 26, knowing that PagerDuty is just 3 times price to sales, and now it's what, 2.5 times price to sales? And it has what, 50, 60% growth. We're not talking about dinosaurs here, right? So if we're gonna talk about expensive, is it really expensive? Is Workday really expensive? The answer is probably not. Is PayPal truly expensive? Sure. You might argue, sure, it went about $90 to $200, but it was nowhere in that hype phase. So I would argue that if PayPal would sell down at $180, isn't that one of the best chances to buy at $180 instead of selling your PayPal at $200? So it's a case-to-case basis. It's a case-to-case basis, guys. You gotta ask yourself, was it in euphoria insanity zone? Sure, Apple was in insanity zone. A lot of people might say that Apple deserves to be trading high, but how high is high? It is a question for you and me, right? Facebook, okay, it was trading at about $200. Nasdaq 10,000. Facebook was not outperforming your Nasdaq. Had you held your Facebook 130 to 290, it was just at pace with your Nasdaq 100. Facebook was not an outperformer. Why? Because a lot of people were arguing in their minds that, well, digital advertising is in a decline, right? But when Facebook revealed in their earnings front that not only was their digital advertising not so bad, they had Facebook Pay, they had e-commerce, they had all these Virtual Connect coming out September 16. Take a look what's happening. The market is too smart that Facebook, even at a 30% rampage acceleration, wasn't being thrown down to trash to 250. And I will argue to you tonight, guys, if Facebook fell to 250 bucks, you should probably buy it rather than sell it. Has Facebook truly been overvalued and insanely overvalued like the Apples, Teslas, and Zoom videos of the world? My argument is that, nope, Facebook is not in the insanity zone. Is C Limited really in the insanity zone? Now let's think, guys. 40, 30 went to about 160. Just because it went 400% up doesn't mean that it is insane. Take a look at how the acceleration has been happening. On the earnings front, 120 went to 160. It didn't go 200 bucks, didn't it? It went, yes, there was a gap up. And tonight, it, I think, will open 140 bucks. Some people are trying to sell 160, 150, 140. And the truth is, C Limited is one of my contrarian, wherein, okay, I'm contrarian in the sense that this is not a definite sell. I might say that Nasdaq 12,000 can go to Nasdaq 10,000, but you know what? I'm not sure if C Limited will go down to 100 bucks. June, Nasdaq was 10,000, Nasdaq went 12,000, but C Limited went 80 to 160, 100%. C Limited deserved that 100% premium because if you take a look at the earnings report of C Limited, what is the penetration rate of C Limited in Southeast Asia? Less than 3%. What was the pace of e-commerce? Everything in the report card was more than triple digits. And guess what? C Limited is just a $50 billion company. It's not in the trillions like Amazon is. It's not in the trillions like Apple is. It's not in the trillions like those companies are. So again, think twice. Let's assume you've got C Limited at $150. Great earnings report. You had C Limited at 40, 60, 80, 120. You kept on buying every earnings, right? You have the belief that C Limited is actually better than Fortnite. And you had the numbers to prove it. It's not just your view. The fundamentals, the hype, everything, you've got it. And was it insanely overvalued? My argument is, you know, this is the contrarian thing that I could be wrong in, but I would not sell C Limited. In fact, if it goes down and tanks tonight to about $140 below, even at $100, I'm gonna buy more. I could be wrong, guys. I could be wrong. I could be wrong. I'm okay to be wrong. Being okay to be wrong will actually give us payoffs. The biggest payoffs come from where nobody wants to bet or the unlikeliest outcome. You know, it took some time, and we were saying in a long time, who would have bet that Wayfair would go 1,288%? Indeed, from $40 went to $350. The question is, do you think that online furniture, this e-commerce, this Wayfair successful pandemic story, is it truly worth 12x the move? And if you notice, a lot of people are arguing in their mind, if they had the luxury of buying Wayfair at about $80, $100, I think they're still gonna sell their Wayfair. $350 has gone to $275. Take note, if you have $40,000 here, or even at $50,000, 1,000 shares of Wayfair, $50,000 to $350,000, you'd have times 7 your money in just what, 6 months? Congratulations, you're better than Warren Buffett, you're better than so many investors in the world. Would you want to trim tonight at $300 and $275? I'd say the answer would still be tempting, and the answer would still be yes. They'd still be taking profits. And they were correct for betting and making that outsized reward because nobody was willing to bet at Wayfair, $50, $80, $100. So congratulations to the Wayfair, whether you were trading it or investing in it. We're talking about the element of surprise. The biggest payoffs come from the element of surprise. It was 355%. I didn't imagine that Zoom video 36 to 300 can go 450. That's an element of surprise. An element of surprise can happen on the upside euphoria to the insanity and also on the fear to the despair mode. Surprises can happen both ways. That's why we say there is more to greed than fear. There's what you call greater fear, which is despair, depression. And there is more greed, which is euphoria. And then there is even greater euphoria, which is insanity. 12,000 Bitcoin can go to $20,000, can go to $100,000. Those are what people talk about, right? Surprises. Zoom video, I'm pretty sure a lot of people were saying insane, making 100%. That's insanity. And when you have insanity, fast lock in of those gains. People who sold at 400 didn't think twice. I'm telling you, they were saying to themselves, oh my God, if I didn't sell that 240, I'm okay to sell at 400, even at 360 tonight. That is still 50% higher than just last month. Last August, I was getting Zoom video at 240 bucks. Today is 360. Even with Nasdaq selling off 5%, I'm still up 50%. That is what you call super outperformance. And of course, these leaders are your top dogs. You'll always get rewarded by outlier success because nobody believed that Eric Yan could pull this off. The pandemic pressure was on and he was hitting more than 3-point shots, right? This is the Michael Jordan of the pandemic, and everybody wanted the Michael Jordan of the pandemic, right? Tesla was the Michael Jordan of the pandemic, right? Also the Michael Jordan. How could it be? Electric vehicles. How could electric vehicles be the Michael Jordan of the pandemic? Because Tesla was always breaking out, and earnings was always doing well. A lot of people were, I don't know why they were still surprised, no? Because Tesla kept on saying that they would have these vehicles and they would be profitable and they would be cash flow. But because everyone was trying to short Tesla, that's why Tesla was always outperforming and getting short squeezed. Yes, 300 times 3 is already 900. But what happened? 100 went to 5, right? What happened to Nikola? Betting on the unlikeliest. Of course, this one went from $10 to $100 and now back to about, I think, $30. DraftKings, nobody was willing to bet on sports fantasy, right? $8. These were June. And, during June, a lot of people were already saying that, this is kind of unsustainable. Making times 5, insanity zone. Wait up, let me answer a few questions because some people are asking me. Next, so even for Workday, Nintendo, and NVIDIA, are they all sell too? The answer is that it's not in the euphoria zone. But if you are scared, then you can sell. But I'd say that NVIDIA might be in the euphoria zone. Not insanity, but it's in the euphoria zone. And I think the problem is sometimes people would have the sell everything thinking, because I'm just going to buy Zoom video when Zoom video falls. I'm just going to buy Tesla when Tesla falls. They have that thinking. So it's kind of hard to really give an answer because not all stocks have the same insanity move. Not all stocks should be sold in reality. Diba? Okay, let's take a look what happened in the insanity. Let's take a look. So a lot of people were saying that DraftKings was insane at about $40 during June. Were they right? Take a note. During July, August, September, DraftKings didn't go up. No new highs because a lot of people said that no new highs. So that's what's going to happen. It has peaked. It might not necessarily crash, but it's not going to go anytime 100% move. Like if you sold at $40, it's not going to go $80 anyway, but maybe it's not going to go $20 either. Do you get the point? Example as well. Well, Nikola was unsustainable, nothing to show. So when it went 10 to 100, kaboom, $30. You could argue that at June time, a lot of people were trying to say during June, You know that at June, $30, it still went $90. Epic squeeze. That's what you call a short squeeze. From $30 to make 300% your money. Do you know why Robinhood traders make 400% this year? Because they were willing to bet on companies like Nikola and DraftKings. And they were willing to bet on a lot of SPACs as well. So let me tell you guys, can FMCI, which we were buying at about 14, which is now 100% in a single month. June, July, August, people are talking about Nasdaq, 10,000 to 12,000, 20% move on the index, but Nikki, you SPAC make 100%, right? 14 to 20, well, not yet 100%, 14 to 22, not yet $28, right? So there is always money to be made. That's the reality. People can talk about shit like Netflix is so expensive, but that's because they're just looking at Netflix. Were they looking at SPACs? And I'm going to argue actually tonight. I'm going to explain to you. Everyone's going to discuss the market is going to tank. But why is it that GameStop from about 6 is 30% up? This is the natural rotation that some people are buying, not because of earnings, guys, but because Chewy entered GameStop. And GameStop is a 99% short float. And I will explain the short squeeze moves that the market is, so the market can be toppish, but what Nikki is saying is that, wow, the market is toppish, but it appears that I can make money in other names and I can rotate. I don't need to rotate straight to cash, but I can also rotate to cash because that means that if I have cash, if Zoom video fell to $300, then I can buy some Zoom, right? So there's a lot of reasons why you can do a lot of strategies in the market. The US is wonderful. There's so many strategies that you could do. Now, you knew that the government was going to bail out the airlines. Would you still short it in the first place and expect to make money? So if the market is rotating to cyclicals and the market is talking about some COVID vaccines, should we go? And this is a question that everyone has been always asking me. Should we go to these airlines? Should we go to these reopening themes? Okay, I tell you that some of the people are willing to rotate even if this is not a high quality cyclical. Because they argue, well, you know what? People, Warren Buffett was wrong. He capitulated at the time when airlines was falling and that was wrong. He should have bought at 25. Sure, it's not gonna go 60 anytime soon, but he could have made money buying at 25 and selling at 35 anyway. So, and a lot of people are going to argue that thinking. It's called sympathy love. It's called counter-cyclical thinking. It's called somebody who's not going to buy cash, but they'll buy Coca-Cola anyway. Because Coca-Cola is at $50, and that is a real breakout. When the market was tanking, indeed, Nasdaq was crashing, but take note that the market was not necessarily going to cash. And I'm going to argue that we will take a look at the bad stocks today as well. The quote-unquote bad stocks, or maybe just called high-quality cyclicals, right? In the high-quality cyclicals, some people would argue the airlines, United Airlines, American Airlines, of course, Gina's Brands is not a high-quality cyclical. And so that is just an example of what happens when you rotate to not high-quality cyclicals. After a parabolic rise, which Gina's Brands did, 90% down too. Can you see that? $1 to $12. If the Robinhood traders didn't sell because it was not a diamond, it was a real faker, $12 goes back to $1. You're back to zero. Remember, not every stock is the same. Not every stock is the same. So what happened? Spirit Airlines, so even the airlines, not every airline is great. So does that mean that Carnival Corp, Norwegian Cruise Lines, Live Nation, what's going to happen to them? June 2020, people were already saying that all of these companies were expensive, right? The market was expensive and they always went to some of these bad names. It's called the bad name play, the reopening, the rooting for humanity play. June 22, they pushed it up from about 14, went to 28. Then profit taking, right now it's going up 14 to 18. Can it go back to 24? It's really a sucker's game. If you ask me, this is like a sucker's rally all the time. People like to trade. By here, during May as well, it was also happening. Take note, April to a very quick move, right? There's always been that. And in fact, the best soccer rally when it comes to reopening theme is, of course, Dave Portnoy, Penn National Gaming, PENN. From about $3.50, Celebrity Factor, the top dog, right? $3.50, went to 53. How much is that, guys? This is where your insanity is coming in. Insanity went about 10x, right? 13x, sorry, 13x. How much more? Let's talk about some insanity names, shall we? OSTK, Overstock, went from about $2 to about $120. This was what in March? $2, $3, 3 to 120. Do we go back to $3? I'm not here to discuss, but I guess that this is something that people know is probably not worth it, not sustainable. Jumia, $2 to 25, not sustainable, right? We said that it's not going to be sustainable fundamentally. $2, $3, sure, you can buy it. Sell it at 8, 9, 10. If you sold it at 20, great move. At $9, is it a bargain? Probably not. I'd argue it's going to go $4 soon. So you have to think what you bought. Think what you bought. You don't buy anything in this market. Momentum accelerates both on the upside and the downside. It feeds on itself. Nobody thought that they could make 10x or 12x or 20x in companies like Overstock, Wayfair, Penn National Gaming, but it did. Bitcoin. Did everyone who bought Bitcoin before thought that they'd make 48x? 48x in just a couple of months or years, right? How much was this? 48x move. From lows, from like sleepy, early trend to about really insanity. And until now, yes, it is still in that distribution zone. It is being sold at about 14,000, gets bought at about 3 to 4,000, gets sold at 12,000, 11,800 to 12,400, never hit 14,000 this year. But yes, you are seeing that so far, when gold rose, when money printing happened, people felt, well, at 4,000, let's try to buy this at 4K and let's make some money here. Buy 5,000 March era times 2, 12,000. Does this outperform as an asset class, 5,000 to 12,000? Nikki would argue C Limited was a better buy. I don't know about you. Okay, Overstock, of course, was a short squeeze play. And Overstock liked to talk about blockchain, right? So $90 went down to, this one is always, this one is very known for short squeeze. Sharp moves talaga. 90 to 8 to 30 to 2 to 25 at this point in time. I would argue, my God, you know what? I was saying $2 to $20, 10x already as of May. But indeed, how lucky I am that I don't short, right? In extremely shorted names like Overstock, $2 went to 20 and went to 120. So you 60 times your money in a company that like shit, which is Overstock. A bad stock, right? Oh my God, 2 to 120. So let me now share to you Nikki's major short squeeze pick, and that would be GameStop. GameStop Corporation, of course, all the digital sales have happened, and GameStop was called a company that everyone should put to hell. It should go to hell. It is a coffin. It is dead. It is RIP, rest in peace. Now, since 2019, from 3 to 4, it could never rally above 6. That was always 3 to 6, 3 to 6, 3 to 6. But why did $6 rally? Why did GameStop break out this week? 6 to 8. Let me explain to you. At $3, it was getting bought because Michael Burry, the guy who shorted during 2008 financial crisis, bought 18%. GameStop was his largest position in his portfolio. At $3, you sell everything you want, Michael Burry will buy it and bury you down. So he will buy everything at 3 and 4. And then at 6, who bought? Chewy CEO. The CEO of Chewy, the pet store, bought GameStop. As to what they'll do with Chewy Pet Stores, which is an e-commerce company, and what he'll do with GameStop with 200 plus stores, let's discuss the fundamentals here. Net sales of GameStop. Nobody talks about fundamentals, right? Net sales of GameStop. This was actually something I studied in June 2020, okay? So this is about 2-3 months ago. Today is September. If you remember, if you were in my inner circle class, let me remind you that this is something that I discussed then, June, and I will give you a real thing that this is not me, Nikki Yu, telling you, let me remind you, I really did that. I will tell you this, the Portnoy top, go to June 15, 2020. Let's talk about that. The Portnoy top, June 15, June 12, June 15, people were talking about the market was toppish, the arrogant ones were so bullish, like Barstool Sports Dave Portnoy. Stocks always go up. Stocks always go up, right? Every stock goes up, leading the army of day traders. Let's go from euphoria to insanity. And speculation was rampant as evidenced by Google Trends. Indeed, that was something that I learned, that after greed came euphoria, and after euphoria came insanity. That system was never known in books. I learned it from experience, okay? I learned that if you try to short Tesla at 1,000, let me remind you, it can go 2,000, it even went to 5. So, fuck the shorts, right? We actually said Tesla 1,000, that was still a buy. And that was what, June, something like that. Yeah, June, July. Yeah, we were seeing something like that. And of course, I was bullish on games. That was something that I discussed. And here, you could see that Ballard, sorry, not Ballard. I talked about a lot of companies, yes. Ballard at 13, I was buying at June, Ballard 13. GameStop, Here Software, yeah, see, I was discussing. That was June 15. Now, I will remind you what happened to GameStop, okay, June 15, and the charts as well, and what you could do today, even at 100% higher or 30% higher, because what did you just learn from me today? Overstock went from 2 to 20. So, Nikki, are you telling me that GameStop can go from 3 to 30? Well, maybe not 30, but how about 10 bucks? Do you want 3 to 10? Because I think that Nikki, you can give you 3 to 10. Let's see. Let's talk about that chart again. Where am I? Okay, here, presenting. Okay, we can talk about the fundamentals. GameStop. Nobody likes to listen to fundamentals except when I tell them you can make 100, 200% here. So why don't you listen? Listen here now. Nikki tells you that net sales is $1 billion, down. Net loss of $165 million compared to net income. Expected, guys. An operating loss of $108 million, expected. Sales of hardware, which was what? Sony PlayStation, Nintendo Switch, and Microsoft Xbox. Sales of hardware was up 50%, up 40%, representing 50% of total sales. Why do you think Nikki Yu studies GameStop? Because she's interested with video games. If I wasn't interested in my core competency, which was studying Nintendo, Sony PlayStation, Microsoft Xbox, why do you think I would care about GameStop? I care because I care about video games as a secular trend. And this is something that Nikki Yu studies when she studies a video game trend. And that is something that you, if you are really competent with what your trends are, should be aware of. Not surface knowledge, but deep dive, deep knowledge. So these sales include new and pre-owned hardware, accessories, hardware bundles. Hardware and digital or physical software are sold together in a single SKU. Software represented 40% of sales for the quarter, down from 47% in the year-ago period. Those sales included new and pre-owned video game software, digital software, PC entertainment software. So GameStop was selling software. In fact, GameStop today has about 5,300 stores across 14 countries. Thus, owning 5,300 stores, great. Of course, it's got a lot of expenses, but to lose $100 million only, or just 5 billion pesos, in approximately 5,300 stores, let me remind you guys how much Jollibee lost. They lost 10 billion pesos. For Filipinos, they know this. Jollibee Philippines, okay? Jollibee Philippines lost about 12 billion pesos operating more than 10,000 stores. $100 million is 5 billion pesos, so kind of the same, right? From a sales, operating expenses standpoint, rental, la la la. And then, of course, if you think about it, how much did Starbucks lose this quarter in 3 months' time? Starbucks lost $4 billion. Did the market care? The market didn't care. You know why? Starbucks has about, I think Starbucks, if my memory is correct, and I could be wrong here, Starbucks is about 40,000 stores worldwide in across 130 countries. So you could second check my memory. I could be wrong. It might be 40,000 or it might be, or 40,000 stores is McDonald's. I might forget. But McDonald's and Starbucks are in that realm. They operate so many stores across the world. And tell you what, Starbucks is trading as if it is not a COVID pandemic loser. McDonald's is trading as if it's not a COVID pandemic loser as well. So the market gave sometimes a very bad student A marks, and that is what you call favoritism from the teacher market. And this is what you call overly depressed pricing for GameStop, despite, you know what? I didn't do so badly. This is like a child telling his mom, Mom, why are you giving me failure remarks all the time? I didn't lose naman so much money this quarter, right? Of course, not everyone knows that. Only the fundamentals know that. Collectibles represented 8% of sales. What is that collectible, guys? That is Funko, FNKO. And I will explain to you that geeks and nerds continue to buy $100 million of toys even in a non-essential world wherein toys are so-called non-essential. COVID pandemic, why will you buy $100 million worth of toys? And you could argue, what are those people buying those NBA collectible cards doing, spending hundreds of thousands of dollars? Or the sneakerheads buying hundreds of thousands of dollars of sneakers? How much is a sneaker these days? $1,000? Some people are like Imelda Marcoses of their life. Those who have like 1,000 sneakers or 100 sneakers in their, I don't know if they will ever wear those sneakers. See, I don't understand why somebody will buy 100 sneakers, but the reality is there is such a niche market who'd buy sneakers, collectibles, and Funkos in the realms of hundreds of thousands of toys that they probably would never play forever. I don't know. Like, but there is that fact. There is that fact. That is a fact. That is evidence. Now, of course, all the gamers in the world know this. Daniel Ahmed also said this. September 11, 2019. GameStop is closing 180 to 200 stores before the end of the year. Expect them to close a much higher number of stores over the next 12 to 14 months. What does this mean? GameStop knows that operating 5,300 stores is not sustainable. We have to close numbers of stores. And so they said, we are on track, and this is in their earnings report. GameStop said, guys, we don't want to die. Please do not give us a bankruptcy 11, chapter 11 filing like Forever 21 did. Like, when Forever 21 declared bankruptcy, a lot of the department stores were saying, guys, if we don't close down the stores, we might go bankrupt tomorrow. So let us just close down all these unperforming stores. To the point that every time an H&M will close down the store, do you know what the market will do? Hooray! Or finally, you understood that you have to close down that store. So when people were telling me, Nikki, do you know that Funko is closing down that store? I should be happy and ecstatic, because they can do so well in the direct-to-consumer world rather than operating a store. That's the reality, guys. We are in the D2C world. We can just deliver your toys if you want to. So actually, it's a good thing that Funko decided to close down their stores. At least no more rental expenses, no more operating headache. They can just do direct-to-consumer delivery and ask somebody to deliver. Anyway, so again, let us discuss. We are on track to close 180 to 200 stores. Profit level, sales transferability over the coming 12 to 14 months. We believe that these actions will add to our improvement run rate with little to no cash expense. Expect our average lease life to be just 2 years. Therefore, what was GameStop saying? 2021, a lot of these stores will be closed down. After the rental lease is over, we will not renew it. So it's actually death to whom? To the mall. It's death to the retail store that was leasing the landlord. It's not gonna be the death of GameStop. And who knew this? Michael Burry. Michael Burry, the guy who did The Big Short. So again, also think about this. So of course, this is not 10 hours ago. This is like June, I think. Basta these are old articles because I've been studying GameStop for quite a while, guys. I was studying GameStop to buy it at $4. And I was thinking 3 to 4. Is it worth the upside if I can only sell at 6? So I was really thinking about that. Online sales are gonna be insane because there are people who are buying $5,000 at GameStop, no? 50% of games, $30 and under is crazy. A lot of gamers were buying in GameStop. And digital e-commerce, okay? Activists were swarming at GameStop. Activist investors were joining GameStop boards. And Digital Commerce 360 was saying that store shutdowns are driving a 519% jump in online sales for GameStop. So this person who was a Reddit, somebody who was buying games, was saying, guys, I'm buying so much on the video games in GameStop. How could GameStop die? How could it be a bankrupt company? Can you imagine that? How could somebody 99% down be shorted by so many people when it can't be? And this is the fact. In May, okay, this May 2020, GameStop sales declined only 4%. In addition, they had a 1,400% increase in May e-commerce sales. Now you could say, wow, Amazon made a 40%, 20%, growth. Guys, GameStop made 14x, 1,400% e-commerce, and you're telling me that this guy is gonna die? It's like this F student deserves an A mark. This deserves a $30. This deserves at least a $10, don't we? So beginning on March 22, GameStop began offering contactless delivery services to all the delivery US store locations. Once their orders are ready, shoppers have the option. Shoppers call the store once, they're waiting outside. Store employee brings the order out to where the customer is waiting. At that point in time, guys, okay? At that point in time, this was June 15, 2020. That was June. I was saying, guys, if you want, buy $4.70 GameStop. Buy it at $4.70, maybe you can sell it at $5.50 or $6. Okay, so fast forward today, Nikki reiterates a buy on GameStop. Fast forward today, the world is better. GameStop is now breaking out from 6 to 780. I'm telling you what, I didn't buy at 6. And even if I was so good in describing that $4.70 was a buy, actually it was even going down to $4, no? And finally, it's now at 800% up. But I think it's not late. If you buy at 8, 7, 6, I think you'll sell at 10, 12, 16. So if you want risk-reward ratio, GameStop is a buy. Okay, that is a buy for today. This day is this September 4. September 4, 2020. Okay, now let's talk about a few things. So GameStop then. Okay, this is a Match Group. Match Group at 120 today. Yeah, I won't buy that. Chipotle at 1.2. I won't buy that. Wait, let me just show to you. I'll show to you the tops that I felt and the companies that I won't buy. Match Group during June 90. Today it's 120. That is 30% higher. Online dating, Tinder, sure, great numbers, but forgive me if I'm gonna say this, but I don't think that it's gonna be sustainable. Chipotle at 1.2, I don't think it is sustainable. Scientific Games at 21.22, I don't think it is sustainable. So what happens to what we buy if the market's gonna fall? And I'm a big fan of Gartner, so it is worth reporting again to you some of their precepts. The Motley Fool precepts are the business checklist. Is it a great business? Now you want to answer all these questions. Oh my God, it's 6:45. I won't be able to finish because teka lang guys. Let me discuss. Oh my God, I have so many slides. I won't be able to finish pala. Won't be able to finish, no? So so many slides. I can't discuss everything. But so let me just show to you a chart of the market, no? Sige, let me show to you a few things. When the market during June was talking about the Dave Portnoy top, it was widely published. There's so many headlines. They call it Dave Portnoy top. I argued that at 10,096, the downside was just 9,000. 5% downside and yet 20% upside, 11.6. Fast forward today, 3 months after, no? Now, you can backtrack everything I say, kasi I'm very well documented. I always said as well during June that, during June, Facebook grew its top line at like this. The fundamentals of Facebook looks like this, guys. Facebook grew its top line 40% in the last 5 years, 81% gross margin. It's nowhere in that insanely expensive zone, 8 times price to sales. A company with 80% gross margins, growing greatly. We're talking about $200, $500 billion companies here. Today, it's $800 billion. It's nowhere at the 20 to 40 times. If you are chasing names, and I said during June, if you're going to chase names, guys, if 10,000 Nasdaq and you're going to go long, you got to be at the best of the best. Else it's useless. And Facebook at that time was 228. Fast forward 3 months after, how much is Facebook today? $280. The market is panicking, but you're up 30%. That said, I have some mistakes. Maybe you would say, wow, Nikki, you're always correct. No, I have some mistakes. I said Twilio was a cloud communications platform. This company helps billions of messages, voice calls, videos, and emails, mobile applications. Netflix, Uber, Twitter, Lyft, Airbnb will not survive without Twilio. Certainly, the growth was there, 67% CAGR. But at 200, it was 20 times price to sales. Know what happened today? How much is Twilio? Twilio today is, I think, at $260. So it is at 26 times price to sales. This company never made IPO since IPO. No money made. While Twilio is expected to generate no profit soon, the market made Twilio go from 20 to 260 in 3 years. The stock is nowhere cheap. It is not cheap. So, of course, you're going to say, but Nikki, nobody cares about fundamentals, so I don't care what you're talking about. True. Maybe that's true. Maybe the market will really not care, no? But if you are asking Nikki, what is a short candidate? Nikki believes that Twilio is expensive. This is what you call a distribution. So Twilio to me, and put this on record, September 4, 2020, Twilio is a sell for me. It's going to go down to 200. It's going to go 175. And if you could see naman it can't even break above 280. You want a short? Short Twilio. That's going to be a sell for me. So yon, I think you cover at 150. So yon, wait 150 below, do not chase. I didn't chase at 190, okay? So I wasn't willing to buy. Careful with the trade desk. The trade desk, digital advertising, the trade desk, I don't believe in it. Trade desk is now trading at $450, 464. I think that this is a triple top. This is an extension that, because of my fundamental understanding, kaya I'm confident because of my fund, not just tech. This is a sell for me. The trade desk, 160 to 460. I'm not calling that it will go to 300, but maybe it can. Maybe it can go 400. So 15 to 20% downside. The trade desk is still expensive on my view. There's so many things that you have to be very careful of. And but I said that Visa is not something that you have to be worried about. June, Visa, I said switch to high quality names like Visa at 175. Why? With 3.5 billion cards in circulation globally, you're highly likely to be a customer. So Visa is the middleman in all the countries in the world. Whenever you're shopping, you're probably using a payment vehicle, and likely you're using your credit card. How did Visa do today? Let's take a look. Visa, I said, switch to high quality. So what is it? When Nikki finds that the market is toppish, Nikki is just rotating to high quality companies. High quality companies like a Facebook and a Visa, pwede rin cash. But yun, June, if you were buying at June, no, you were buying at 190, once it didn't even go to 175, diretso to 208. Even if Visa goes down tonight, it's probably gonna go just 190. Not much downside really. So I don't think that you'll make a 30% epic crash if you're buying a Visa. So you're gonna buy Visa at 190. That is what Nikki Yu is telling you. Visa is a scalper. They make 1% on 38 billion payments every year. And that will be bigger and bigger. and got a lot of cash. So this is what I said. Probabilities. Let's talk about probabilities. Low probability of a deep technology sell-off. That was June. There was a high probability for a normal garden variety sell-off. There was low probability for a shallow carnage sell-off, but there was a high probability for also a strong and powerful rebound. So don't bet too much, just understand the probabilities. So today, I think like there are companies with a high probability of falling down, but there are like example, Nicola, diba? I said Nicola, Lululemon, CMG, those were gonna be unsustainable, but Starbucks and Disney were contrarian buys. So today, if you're thinking, what should I put my money into? If Starbucks fell $80, I think some people will buy it. If Disney will fall 10%, like 135 goes down to 120, people will buy it. Facebook and Disney, people will buy it if the market will fall. It's not in the insane zone. Did you ever hear people, Disney, I'm 100% up? No. You don't hear that because it's not 100% up. Precisely because it's not insane. So, I think like, I like to discuss more about the downside and upside, but really it's time's up. So, I'm gonna discuss a lot of these things on class, and you heard a lot naman na today. So, I always have so many slides. Talk about bad stocks and one-night stands, like, but I think like one name is enough for you, no? GameStop is enough for you. GME. So, Nikki is telling you that GameStop is a buy. Your downside is probably at 7 or at 6, but your upside is bigger. So whenever your upside is bigger than your downside, the answer is a buy. Now with Nasdaq, I said that 11.6 was my target. Where did Nasdaq go? Nasdaq went more than 11,600. This is where Nasdaq went, 12.4. So let's take a look at some Fibonacci retracements. Teka lang ha, guys. Let's go to the Nasdaq weekly. Ang babagsak dyan sa Nasdaq mo is your Apple. Okay? Kasi Apple is your big bellwether in Nasdaq. Dami kong mga fans club na nagagalit sa akin kasi binebentahan ko yung Apple favorite nila. Ano magagawa natin kung masyadong accelerated yung Apple mo? Hindi naman deserving ng Apple eh. Hindi naman kaya ng earnings niyan eh. Teka lang ha. So if Nasdaq is topping out at 12.3, at least 11,000, maximum drop 10.1. So yan lang. It's not really like some go back to June, 10,000, balik tayo sa June. Let's go back to June levels. So you won't get back to March. And the market knows that the leaders and the outperformers. So think twice. If you are selling a winner and a leader, you might regret it. So I think like C Limited, 150 can go 100, but it's more of a buy to me. If it goes 100, guys, if it goes 100, or even if it goes 120, it's probably a buy. So think twice before you sell. Now, sayang ang daming sectors. So for my inner circle classes, I'm gonna discuss to you sector by sector by sector. Insane na ba to? Euphoria na ba to? But I hope that I gave you how I thought, my process in whether it is a momentum to the downside or just a garden variety sell-off. Okay? Thank you very much, guys. I hope I clarified myself. And bye. Thank you very much. Goodbye. Marami bang tanong? Part 2 tayo on Monday. For all the inner circle classes, may part 2, part 3, part 4, part 5 tayo, guys. Marami tayo araw-araw na part everything, every day. Okay? So, magtanong lang kayo sa inner circle. Oo naman. Kayang-kaya natin yan. Hindi tayo mayabang, pero lahat ng mga tops and turns nitong market, nakukuha natin yan. Okay? Hindi ko lang lahat na bebet eh. Kasi, imposible yung pera natin magkasya sa lahat ng stock picks, no? 20-30 stock picks eh. Huwag kayo matakot sa Beyond Meat kahit bagsakan niya ng $100. May kulto sa Beyond Meat. Gustong bumili niyan sa 120 on 100. Yung C Limited, kulto stock yan. Yung fans club ng C Limited, di lang hype yan. May funda kasi yan eh. I think the most powerful baggers are those companies na hype, pero may funda. May funda siya talaga eh. Ano magagawa natin kung may funda to? Hindi naman yan Nikola, Tesla eh. Tesla yan eh. Hindi yan Nikola, di ba? So, mga ganun. So, baka makakuha kayo ng Tesla tonight at 350 eh. So, kung nangyari man yun, bili tayo. Kung nangyari yun. Sige. Bye-bye. End ko na for all, no? Hala pa. Oh, yun, tama. End ko na for all.